Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review silver gold, talk about the commodities and the silver gold mining companies. So without any further delay, let's go ahead and review all of these key charts and data. Right now you're seeing a sizable bounce in the dollar index. I do think that this will continue, as you guys have seen. Every single time the Federal Reserve doesn't pump money into the system, you always see the dollar index have a sizable move upwards, right? And every single time quantitative easing comes into play, you always see a sizable move downwards. Sizable move downwards after quantitative easing too. Sizable move upwards, right? So again, the thing is that after quantitative easing 1 ended, this is the result of it. Huge rally in the dollar. Quantitative easing 2, huge downwards trend in the dollar. Now we're probably going to get a huge upwards trend. The point here, guys, is this. You guys are looking at a pretty interesting pattern. Why? Because it's a double topping pattern. Not only that, it is an M pattern. Now, M patterns are something you don't really notice that much. I do think that when you look at an M pattern, you have to be pretty, I guess, kind of bullish actually, because you're looking at, basically a whole entire effect where Fed stimulus comes in, Fed stimulus comes out, Fed stimulus comes in, Fed stimulus comes out. Every single time Fed stimulus goes away, you see a humongous rally in the dollar. And right now it's looking awfully similar to what you've seen before back at 74, except we've only gone down to 73, so it's not that big of a difference. You could see this type of phenomenon continue to happen for as long as the Federal Reserve keeps on getting wishy-washy with its quantitative easing. Alrighty. Now, moving on, I want to go ahead and review the Euro-US dollar. Euro-US dollar is having its own issues. Again, George Soros did point this out for quite a while now. He thought the Eurozone has a high possibility of breaking up, as poorer countries have a harder time servicing the debts, and basically, it's basically a huge gap between the rich and poorer countries, and Greece is definitely one of the poorer countries. Now, since the euro is deflating, because obviously a euro going up in value to the US dollar is deflation, and for governments who have ballooning interest rate payments, deflation is a total nightmare, and they have no control over it. This is the whole entire reflexive theory that George Soros points out. Eurozone can't sustain this behavior of deflation. They just can't with these ballooning inflation rates. They just can't do it. I mean, with these ballooning interest rates, without inflation, you can't pay off debt that continues to compound itself without some form of inflation to increase the monetary supply. Therefore, they can tax more of that inflation to pay off their debts. And right now, none of these euro states have much control over the euro. Eventually, it means the breakup of the European Union, or not really the European Union, but the euro itself. Because, in the US's case, states adhere to the federal government. Alright, and the federal government says, we need stimulus. Alright, let's get the Federal Reserve printing money. Well, not really printing money, but swapping money, or basically buying bonds away from investors, therefore increasing the monetary supply. But that's what the Federal Reserve can do. But can the European Union or the IMF do that? Not as much, not with as much freedom. Again, all they can do is bail each other out when the worst poop hits the fan. But until then, I mean, you know what, guys? The European Union is in big trouble. They have ballooning deficits. They have some of the highest deficit to GDP ratios, much more than the US. I honestly think that if there's a shoe to drop, chances are it would be Europe before the USA, right? And if the European Union breaks up a little bit and they go off and issue their own currencies again, I wouldn't be surprised. And that totally gets rid of that whole entire global currency garbage nonsense theory. Because, quite frankly, global currency No, without, you're not going to get a global currency when you look at the euro as an easy example of why. Quite frankly, a global currency won't work. Now, how does this all lead into silver? Well, the thing is that since the euro is weakening substantially, you're going to see silver weaken substantially as well. Just the way it works, because whenever you see the euro weaken substantially, it means the US dollars is going to strengthen substantially. As you guys can go ahead and see, huge strength in the dollar index. What do you guys see on the silver spot? Huge weakness on the silver spot. Not only that, you got the sell in May effect, you got permanent open market operations coming to an end. Therefore, dollar index continues going higher as silver continues roaring, going down lower. Not only that, silver was hyped up for quite a while, and of course you got a big player playing against you. And who could that be? Deutsche Bank, JP Morgan, and Chase, two of the biggest banks in the world. Who in the world, if I was, just me personally, would I sit on the opposite table of JP Morgan and Chase and say, I'm gonna crash JP Morgan and Chase? First of all, there are many financial interests aside from JP Morgan and Chase who don't want that to happen. I mean, if you crash JP Morgan and Chase, you're not gonna have an economy. It'd be worse than crashing Lehman Brothers. So again, the Federal Reserve would possibly have to come in and bail out JP Morgan and Chase for making stupid derivative bets on silver, or the Fed itself can assist JP Morgan and Chase in crashing silver itself. Then that's a conspiracy theory there. Why? Because if JP Morgan and Chase goes bankrupt, I myself, since I bank at JP Morgan and Chase, I wouldn't have money in my bank account. And if you're banking at JP Morgan and Chase, you wouldn't have money in the bank account. And of course, you would have a huge collapse in the money multiplier effect because JP Morgan and Chase has around $1.8 trillion in holdings. They hold on to $1.8 trillion in money. Your guys' money, including my own. And quite frankly, if JP Morgan and Chase were to disappear one day, and they couldn't, and there's this huge bank run and whatever, you wouldn't have an economy in the U.S. Just to put it simply. So there are many financial interests besides just JP Morgan and Chase to make sure silver doesn't go any higher. Alright? So that's what happened at 50. That was one fundamental reason. And quite frankly, if you guys thought that you guys were going to crash JP Morgan and Chase, you weren't fighting a battle with just Chase Bank alone. Chances are you were fighting a battle with Deutsche Bank as well, along with the Federal Reserve and the European central banks. Right? Who in the world are you guys to think that you could push on the earth and think you could budget? Nobody. And all those people going out there saying, oh, I'm going to crash JP Morgan and Chase. It's not just JP Morgan and Chase you're trying to crash. You're trying to crash the whole economy along with it. And quite frankly, there is no financial interest more suited to stopping that type of behavior than a central bank. Again, so what happens here is that silver has this huge margin requirements rate, hike. I mean, it went from 6,000 to 30,000 per contract. That seems kind of ridiculous. It seems like risk management, but it also seems like, not only JP Morgan and Chase is out to do you guys, it also seems like the workings of a central bank along with other political parties attached to it. So here I am saying there are some political interests, but I still think that there are some strengths in some certain areas like 32 and then maybe even further down 26. But if I were you guys, I'd probably wait for a bounce at 32. This could probably go a little higher, but if you see the dollar index continuing to go lower, you're probably going to see the silver market continue going lower as well. So again, I'm not really a buyer into this little bounce right here. I actually want to be a seller, and as in selling short into some strength right here. But that's it. I don't want to be a buyer here. I do want to be a buyer on this multi-year trend line right here. And that's all. And then maybe at the $26 level back here. And then you could probably see a completion of this head and shoulder pattern and a break on the neckline just to see it continue to go lower. So again, you're probably going to see a huge rally at 25, and then the rest of it's history. If you see a head and shoulder pattern, it's game over. you're going to see it go all the way down to 20. It could even go lower than that. And, you know, everybody could point their finger at JP Morgan and Chase. But markets are heavily manipulated, and you could easily, and JP Morgan and Chase could easily walk away with it saying, hey, it was overbought, dollar turned around, a silver trade fell upon itself, head and shoulder pattern was there. Yeah, we're not really responsible. It's not like we told CME to raise those margin requirements or anything. And yeah, we also got some assistance from the Federal Reserve to end permanent open market operations and stuff. So yeah, you know what? No, then even if they probably has somewhat, even if they probably did have somewhat, you know, the linkings to it, it doesn't matter. You know what? You guys aren't going to make JP Morgan and Chase go bankrupt, and quite frankly, you guys are not going to make JP Morgan and Chase liable for any of your losses in silver. So again, that's kind of the story with silver right there. As for gold right here. You know, gold, it is kind of getting somewhat of a bounce, but again, it will follow the silver chart and eventually it will go lower. But I am pretty bullish at the 1,420 area. If you guys look at the max chart, you guys will notice that there's a multi-year channel right there. It will find some support. You could find a bounce off that and trade it with the GLD. Anyway, that does it for me. Thanks a bunch. If you guys are interested in this video and other videos, please be sure to go ahead and subscribe to my channel. I will have more for you guys in the weeks and months ahead. If you guys want this charting software, please be sure to go ahead and check out the link right below. Take care, folks. I'll see you guys next time.